Now we're continuing to talk here about operating leverage. And I'm going to give you an example here of how you calculate what's called the break-even point. And then I'm going to show you what it really means and financially what's the impact of break-even point. Now in the last video I showed you how to derive the break-even point formula, which is fixed cost divided by price minus variable cost. Most students on test, they like finance professors to give them break-even point problems because they're fairly easy to do. You're going to be given, just as you would in practice now, the fixed cost of the company, the price per unit, and the variable cost per unit. So in this example, the fixed cost is $60,000, the price per unit is $50, and the variable cost per unit is $20. If you plug those into your formula here, 60,000 divided by 30, you'd end up with 2,000 units. Now this is what's called operating break-even. And operating break-even tells you how many units you need to produce and sell in order to reach the break-even point, the operating break-even point. Now, to show you the impact of this, I've put up an income statement here. And we're going to calculate the income statement assuming that we produce and sell 2,000 units. So what's revenue or sales going to be? Well, we're going to produce and sell 2,000 units, and we're going to sell each unit at $50 per unit. So the price per unit is $50. $50 times 2,000 gives us sales of $100,000. To calculate total variable cost now, you take the number of units you produce and sell and multiply that by the variable cost per unit. So if you take 2,000 units and multiply it by $20, which is the variable cost per unit, you'd end up with total variable cost of $40,000. Fixed costs, just as the name implies, are always the same. So fixed cost would be $60,000. And if you take sales minus total variable cost minus fixed cost, your operating profit, your EBIT, is zero. Now, this is as a finance manager, as a financial manager now, this is a dangerous thing to do, to operate at operating break-even. Lots of the financial packages, kind of the canned packages, give you this number. And a lot of people think, you know, when I start this new venture, I don't want to make a lot of money. I just want to break even. And they think they need to produce and sell 2,000 units. If you produce and sell 2,000 units, your operating profit will be zero. Does the company have any interest expense, have any debt at all? Probably so, which means you're not going to have any earnings for paying the interest on your debt, which means legally, that's one of the legal definitions of bankruptcy. So again, do you want to go bankrupt? Of course the answer is no. Do you want to operate at operating break-even? Probably not. But this is what the break-even point formula tells us. And if we do what it says now, our operating profit goes to zero. Remember, this is not net income or anything. This is operating break-even. What goes to zero at operating break-even? Operating profits.